Today on the Spotlight, we're joined by Jonathan Hannam, the Managing Director for Taronga Group. Jonathan, thank you so much for joining us today.
Thank you. Great to be here.
I'm really excited for our conversation, but it might be interesting to announce it's almost 10 years of Taronga Group, correct?
That's right. We're coming up to our 10th anniversary in October.
That's so exciting.
Yeah.
What have the first 10 years been like? How's the process been?
I think like any new company, the first few years are actually quite challenging. We set out with a vision to create a company that was at the interface between real estate and technology. And we decided that the real estate world wasn't moving fast enough. There was all this interesting technology that was starting to come into the sector, but the users, the developers, the asset managers, they were quite slow to change. And so we realized that there was actually a great opportunity to have a business that was supporting emerging technology on its journey through the sector.
That's amazing. What inspired you to sort of take that technical route? Did you have a background in tech? Or?
Not at all. So I'm very fortunate. I partnered with a guy that is an M&A specialist that was running basically a venture capital fund that was doing investments into data-driven companies. And we actually had the first company we looked at together. I was working at a listed property company, Mirvac. I was sitting on the board of a football stadium in Melbourne, so called Etihad Stadium then, now it's Marvel Stadium. And we were trying to change the asset from within and looking at putting in IPTV, Wi-Fi networks to support the customers. And at the board level, it was actually a very difficult discussion because many board members actually hadn't dealt with technology before. And Avi, the other co-founder, had invested into a pretty interesting beacon technology that allowed us to understand the customer movements through an asset.
Wow.
And so I looked at this tech and I thought, this is fantastic. And we should put this in the stadium and we'll have all that extra information about our customers. We'll be able to delight them. They could order drinks or food to their seat, things like this. And yet when we tried to get it approved at the board, there was a lot of resistance. So we sort of thought about the broader sector and realized that for many real estate groups, that first decision of looking at a new technology is actually quite difficult. And that was the opportunity. We could create a business that was completely designed to support the tech on its journey through.
That's amazing. What did those initial conversations sort of start like with your co-founders?
So I think from the co-founder, so we discussed a future business and we wanted to take on board all of our learnings from all our previous experience about how we wanted to work. And so 10 years ago, it wasn't actually very familiar for people to work from home or to have agility. We actually had a business model that was based on creating a culture where they had to deliver productivity, but it didn't matter where they delivered it from. It was an organizational approach where everything we do is actually about supporting our investors. We do a lot of work with our founders, so the companies in which we invest, and really trying to be that force for change to help them navigate through the real estate sector. The first part, though, was to win investors. And I think for any person starting a new business, you often have a vision of how long it will take to generate revenue and to win customers. We had a vision that we thought we would be able to do within a year. We'd have some investors that were going to support us. In actual fact, it took a lot longer. And so I think if you're starting a new business, you need to have that ability to be resilient. We managed to win a few advisory pieces of work, which gave us some revenue, but it wasn't until about 2018 that we went to a formal launch of a fund. So after 3 years, and that was based on a lot of the investors we met. They really liked the concept of what we were doing, but it was the first time they'd seen something like this. And so we had to bring them on the journey. So our first 3 investors were actually here sitting in CBRE's offices in Sydney. So CBRE out of the US was one of our first investors. So we had fantastic relationship with CBRE from the start. They were already seeing in the European and the US markets that there were venture capital funds, and they decided to support us as their venture fund for Asia. And once we had CBRE, then it became a lot easier to have other parties come in.
Yeah, that's a wonderful first sort of supporter for the group.
Massive support. And then once we had CBRE, went out to a few of the other investors and they could see that this was now starting to be something that was real. We actually made 7 investments before CBRE came into the fund. And those 7 investments were made from our own funds. So Avi and I put our own money in. But we had to prove to the market that we could source interesting technology companies and actually secure them. And so actually those first 7 deals, they've all done really well. But we actually gave them as part of our commitment to the fund. They become the first seed assets that went into the fund.
So why do you think there was such a hesitancy from investors, especially in property, to adopting those tech use cases essentially?
So I think the first step is that for most decision makers, when they're looking at something that's new, it's actually much easier to be a fast follower. And so, real estate is a sector that has, we have heavy government regulation in development. If you're doing a development, you've got to deal with weather, you've got to deal with permitting, you've got to have agreements with the unions. You've got so many issues that can go wrong in a development. And then your innovation or the tech person comes along and says, well, could you also try this new idea, which is going to dramatically change the way that you do your craning, and it will reduce the costs of the cranes. But you're not sure if that's going to be a solution that will work. So it's very easy for a decision maker to say, well, we'll wait until somebody else has done that and that we can see that this tech is being used. And so we've got a number of our companies where we found a use case that it might be operating in the US, and then we're bringing it into the Australian market, or Asia, bringing it into the US market. And those technologies, it's very difficult for the first win, even in a new market.
Yeah.
Right? So they might have Lend-Lease, they might have a big user in Asia, but when they come into a new market, it's a whole set of new regulations that you have to deal with. And so I think what we like about this space is that the real estate sector is quite scalable. Once you get something into an asset, it can generally be used in Sydney, Singapore, or San Francisco. But to get it in the first time is actually also quite difficult. And that means that we need a team that's quite resilient. We don't give up. We keep calling, we keep chasing, we keep introducing these technologies. And eventually you find somebody that actually wants to change the organization. But it just takes time.
You've got to really take them on that whole journey so that they can see,
We do, and the journey is different for different decision makers.
Okay, how's that?
So imagine you're the financial controller is only focused on the bottom line.
Yeah.
The sustainability head wants to see carbon emission reductions. Actually, I think for many of the CEOs, so the key decision making group within a business, it's the strategic decision that they are making, and for them to make a decision to support innovation, it seems like it's a very easy step, but actually you need to be able to work within your own organization to allow people to fail. And that's a really interesting sort of dilemma. So at Mirvac, we had incredible support of the CEO, the board, the executive team to drive change throughout the business. But we had to actually run the key decision makers even deeper down into the business through a program to allow them to think about change in a different manner. It's okay to fail, as long as we learn from it. And that's actually something that most organizations actually don't do.
It takes a lot of confidence to be comfortable with that failure, though, and willing to give it a go, even if you don't know the outcomes 100%.
And there's cultural issues, right? Especially in the current market where people are very focused on cost at the moment. Business as usual is about survival at the moment, but actually this is the time when people should innovate, because as we move out of this period of slow markets or global uncertainties, the companies that are actually making change now they'll be in the best position for the future.
Usually they're like bad times to sort of just trial and error. They're like, well, it can't really get any worse, so to say.
Yeah.
Let's try and learn and develop as much as we can so that.
Yeah, so so for many groups, they think of, if you think of an office building, it's very easy to get approval to do an upgrade of a lobby. And that might cost, in this asset, it might be $70 or $80 million to redo the lobby. It looks beautiful, but we can't prove that an upgraded lobby delivers tenant retention. But now we're starting to see that a lot of the innovation and technology can prove to be giving an outcome that is tenant retention.
Yeah.
And that's when you start. So this is, real estate's all about rent.
100%. And you're also providing such a great value to your occupiers and making them want to stay in the building. You're keeping it up to date for them because, as you said, obviously property is a little bit slow in adopting technology, but all the other companies around the world seem to be very quick at, how can we integrate this as fast as possible?
Yeah. So I think part of our learning has been to really focus on the customer. And so a customer across real estate is quite different. So in a shopping center, it's the customer that's purchasing. In the commercial office, it's the tenant that's signing the lease and occupying the space. We need to make sure that those people feel valued in the assets that they're coming into. And if we can create, using a technology to delight a customer, that's what we're trying to achieve with technology.
Do you think, obviously, customer, you want it to help benefit them, but as you're talking about, you have to tailor your journey, I suppose, to some of the different key stakeholders. Is there a certain stakeholder that you've found that's a little bit more positive towards the change or encouraging of it and champions the integration of it?
So I think most recently, the boards have been very focused on safety. And so any construction-related technology that delivers a safety outcome is likely to get a lot of attention within a big developer. And I think customer, right? The boards have understood that actually, in many cases, the owners of the assets are a little bit too remote from the actual customers that are using their space. If we think of something like a precinct, like International Towers, they currently have about 55,000 people coming through the precinct. But because not many people are going onto their Wi-Fi or using the building apps, they don't actually really know many of the people that are coming through their space. So how can we create a situation where they actually understand the journey that that person's coming from? How do they get to work? How do they use the space? So a lot of the technologies are about actually trying to understand who the customer is in the assets.
That's really interesting.
Without being intrusive.
Yeah, you've got to find that nice sweet spot, that balance.
That balance.
But yeah, the more you can understand about your consumer base, it opens so many doors and opportunities that maybe you hadn't considered before, but actually this would be really valuable for them.
Yeah, and then I think there was a lot of interest in climate-related technology over the past few years. We're sort of seeing in the US there's a bit of a movement back away from that space, but resilience is still a very big issue for many developers. They want to know that their assets are able to withstand weather impacts and weather events, that their portfolios are not in a flood zone, not likely to be impacted by bushfires.
Yeah.
And that's, it's the nature of a market where there is climate change. A lot of the assets that are out there are actually likely to become distressed over the next few years.
100%, especially as, we're seeing it far more regularly, these sort of natural disasters or hybrid year events. If we could go back to when you started your role as a founder, what was that transition like between, you were at Mirvac beforehand. What was that like going from a sort of corporate career to starting a business?
So Mirvac, you have a salary, nice offices, you travel well, and obviously a lot of pressure for the work. And then you move into a very small organization of a couple of people. What most founders do is they don't take salary to begin with because you keep everything in the business as long as you can. You keep it going without actually having too many costs. That's tough. And so I think for many founders, the resilience, again, that word, right? How do you make sure that you can survive the first few years of the vision that you're trying to do? I'd done it once before. So post the financial crisis in 2008, I tried to set up a business. We got to about 6 people. We had offices in London, in Australia, and in Sweden.
Wow.
But we were so close to making it, and then it became too difficult. And it was
like the financial crisis. You can't predict that.
You cannot predict it, and we were impacted because we had a big investment that we were actually trying to close in Sydney, and we had it fully approved. It would have made the company, and the investor was a foreign investor, and as the financial crisis impact hit, the currency issues became quite dramatic, and they decided they needed to hedge currency, which reduced the profitability of that investment, and we were unable to meet their minimum return requirements. So we all parted in fair ways. We're still friends, but it was so close to making it. I think what we learned from that was actually, to have that ability to go for a couple of years without having to take a salary as a founder is actually really important.
Yeah, and that's obviously, it can be quite a challenge though, can't it?
It is.
You have to sort of try and protect it as long as you can, and make sure that the company can keep growing,
Yeah.
at very great personal sacrifice.
And we see it in many of the founders in which we invest into, where we run a growth program, and the growth program is to support companies as they go from a sort of early stage or seed stage to the sort of next level, which is moving into growth. And in one of our programs, we actually put heart rate monitors on the founders
Really?
to assess their health, and the stress levels that founders are under is quite incredible.
Immense, yeah.
And this was done in conjunction with KPMG and the High Growth Ventures team. And it was a really great exercise for them to understand that sleep is so critical. We had one founder who said, we were raising capital. I was getting 1 hour's sleep per night because I was dealing with the US and dealing with European time zones.
Oh my goodness.
And actually, it's very hard to invest into somebody that's only getting 1 hour's sleep.
Yeah.
Because that's the long-term business that you need to succeed. You need the founder to be successful.
You need them to, have sort of a sustainable life.
Yes,
so that they can keep going and keep it growing.
And then you could also say, well, the founders that are successful, those that actually make that and then get through that. And so I never want to go back again.
No, I've been there, done that, bought the t-shirt, and moved on. What do you look for aside from, having good balance and clarity in founders? What are some of the other traits you look for?
So it's changed a little bit. I think as we now have about 35 companies we've invested into. We often look for the founder, I guess the mentality and the ability that they can actually withstand a lot of pressure. We actually have a lot of our ventures where we have dual founders.
Okay.
Because then, individual decision making is never good, and ideally diverse backgrounds for the founders. Then you actually get a little bit of a balance where there'll be different strengths within the team, and you already have that sort of support. We look also for the actual technology. What we want something that is scalable, not just in one market, but will work in all markets. So we haven't invested into digital marketplaces because they're often very local. There's no barrier to entry. Someone else can create an app, and that's it, right? What we want is something that is has quite a moat around it to protect the actual investment. So a lot of IP. Mm-hmm. We do a lot of hardware investment and a lot of sensors and a lot of materials. So we've got a company called Carbon Cure where we inject captured carbon dioxide into concrete.
Oh,
it actually makes the product stronger. It's being used by groups like actually Fletcher's in New Zealand.
Oh, really?
It's been used by. In Australia, we're doing pours for Lend-Lease in Canberra. It's in 700 cement plants globally. It's not a startup. It's a company that is actually backed by us, Microsoft, and also the Amazon's clean tech fund as well. Yeah. So the clean tech funds of Amazon and Microsoft. Mm-hmm. But it's that type of technology where it can actually change. It's about a 6% reduction in CO2 for assets that use it. So that's a founder that is a very experienced founder. It's not a startup.
How long has that company been going for?
It's now more than 10 years, that one. So it's not an early stage company in time.
It's well into its growth stage.
Well into its growth stage, expanding massively into the Middle East. So we've got one of our investors, Aldar, has been using it in the UAE. Mm-hmm. It's been going into Saudi Arabia. In Singapore, we just had Bill Gates on site pouring cement, which was really fun.
Wow, that's amazing.
But it's that sort of technology that we want to invest into.
Yeah.
But back to the founder, I think the quality of a founder is also the founders, they've got to be able to run a business. And so, often they're a technology-focused person that has this drive to create the technology. And then what we have to do as an investor is to support them to bring in, it might be a chief investment officer, it might be a financial controller. And that's what we do.
Do you find that in those early startup days, companies where they've got like a CTO and a CEO, so someone to take care of the technical side and someone to take care of the business side, those are companies that typically do better because they've got the sort of foresight to manage both business and technical?
It's hard to generalize in that because often there's very few people in an early stage company. And then as you're adding those skill sets, you need to get the balance right because the culture's got to work.
You've got to blend the right culture.
Got to blend it, right? But we have some great founders, and I think part of what we try to be is a strategic partner that not only helps them with capital, which is important, money, but we're also we do a lot to help them get access to the real estate sector. So we have a big network of partners we work with. And if we can bring them customers, that's actually the best form of capital.
100%. And that's, as an investor, that's kind of one of the best things you can do is help them connect into potential opportunities. When, as an investor, what are some of the things that you look for in a company culture that says this has sustainability or this can grow? Or as an investor, how do you guide that? How do you say, hey, if you guys start implementing more of a customer obsession and things like that, you will go far?
Yeah. So it's different again in each one. So we're now, for most investments we make, we're either leading the round, which means we're the anchor investor, or we're already a significant investor. So we might be sitting on the board already. Our role on that board is partly governance. It's partly to make sure that the business is thinking, not just about the short-term goals of covering its costs and starting to scale, but also about the legislation, worker safety, which is a big one for us. We start every board meeting with a discussion about safety.
That's
it's
you've got to keep
critical.
it at the forefront. Yeah,
it's critical, and it should be the first agenda item for every board. We try to start measuring near misses, which is probably, this is something that Mirvac was very much focused on. If you start to measure and record near misses, you have a much greater chance of reducing any incidents because you're ahead of the game.
Do you think that there's a bit of hesitancy though, if it was a miss, for people to actually report it?
Yeah. So how do you automate that reporting? So that's what we do with some of our companies. So we have a really interesting Australian company that's called Prescient, which is for construction industry. It's a camera and visual system that identifies a human walking in a blind spot.
Oh wow, that's amazing!
It's super cool. We've co-invested in this one with Main Sequence out of CSIRO, and we've taken this business. We've introduced it to many of our partners. It's getting huge traction. But if we can actually identify that it's a person, an alarm can go off in the driver cabin to warn the driver that there's a near miss. But the safety officer also gets that feed. And so the safety officer knows which driver is actually having a near miss. So at the end of the day, if one driver has had 5 near misses, we can actually come and talk to the driver and say, well, did you get enough sleep last night? Is there anything wrong? And if that recording actually is a serious event, we can actually escalate that and potentially remove the driver from driving.
Interesting. Is there any way of measuring the people who are operating in the blind spot? Is there?
Yeah, totally.
Oh, really?
So
That's
a lot of construction sites have, there's contractors and then there's subcontractors and then there's, people that are on a site doing one small, plumbing job.
Yeah.
And they may not know the routing of the vehicles, or they might not understand what's going on site that day. And it can, I think the future of this is that we will hopefully have no fatalities on our construction sites.
Yeah.
And that's the goal that we're trying to achieve.
That's amazing. When you were starting to build the company, what were some of the values or ideas that you were moving towards? Was it the, making a safer working environment or helping founders grow? What were some of the things that were your North Star?
So when we set up Taronga, we actually had a brown piece of paper, a bit like this table, and we wrote down exactly what we were going to do and then how we were going to do it. And actually, we pull that paper out every few months and just check that we're on track of what we were looking to achieve.
That's cool that you've still got the paper 10 years on.
Yeah. So Taronga is actually an Aboriginal word, an Indigenous word in Australia. It means beautiful view.
Oh, that's nice.
Right. And so we were thinking about this, and I'd moved back to Australia from being offshore for about 20 years. And I'd seen what had been happening in Australia from an Indigenous point of view, and that we weren't really doing very much to address Indigenous challenges. So part of our vision was that the business would look to do investments that would support and actually try to even prevent some of the problems that were happening in this space. So one of our quite early investments is a company called Xander Cardian. It's a pretty cool name. But it's a sensor that it allows us to understand the heart rate and breathing of people in enclosed spaces. So if there was a sensor in the roof here, it would understand there's 2 people sitting in this space.
Wow.
And it would only know it because it's identifying 2 different heart rates.
That's amazing. So what's the...
Yeah, the link's coming. So we've actually put it in prisons. And so one way to address Indigenous deaths in custody is to understand the health of the inmate. We've actually had 2 deaths saved where this technology has activated and told the guards that a person was having trouble breathing.
That's incredible.
And it's non-intrusive. We don't know who the person is. We just know that in this location, there's somebody having a problem.
Wow.
And so we can then send in defibrillators or support.
Do they use it in hospitals and?
Just imagine hospitals, aged care,
Oh, wow.
right? So in aged care, dementia patients will often take off their alarms.
Yeah.
And with this device, we actually can understand that there's somebody in a room, and that room actually, we can understand if they're having a problem breathing. So let's say
completely unintrusive.
Unobtrusive. So they might fall over in the bathroom, and the device can actually identify that.
That's
So
incredible.
it's that type of technology. As a business, we wanted to be investing into these things that can actually make a difference. And I think that's been, for a corporate, a lot of our companies have an environmental focus, climate, sustainability, or a society benefit. And so we've done another one that's actually a similar type of sensor. It's a heat sensor that would actually detect that there's 2 temperature points here. And it can actually identify if there's, say, a person that's been left behind in a childcare centre. Let's say there's a child that's hidden in the cubbyhole and everybody goes home. This device would allow us to know that there's a movement of a person in this space.
Interesting.
And you think about security,
Yeah, I was
about
just gonna
border
say.
control. Think about, there's so many use cases for this type of technology.
That's amazing. And how old's this company that's?
So Calamino, the second one, it's an Australian company that's out of the Australian Tech Park. It's about probably 7 years old. We were a very early investor in this one. We've actually, one of our team members is spending 2 to 3 days a week in this company.
Wow. So you guys get really involved
We
in
get deeply involved.
That's amazing.
And the next phase of this one, so it's global already. So they've actually integrated into a project in the UK with Guinness, where they've connected this technology into the HVAC system, and they've worked out where people were in the space, and they've managed to reduce the air conditioning by about 30%. So huge cost savings just to understanding. You imagine in this environment, we have a lot of people working from home. Friday, it's very difficult to manage the building temperature. You can actually know the heating and the temperature be designed exactly where people are.
That's amazing. There's also just immediate cost savings.
Immediate cost saving.
Yeah.
It's a sensor that goes into a light fitting. It's so easy to install.
That's amazing. It literally just clips in.
Clipped in. Yeah.
That's incredible.
Yeah. And the device and so the next phase of that.
Scalable too.
So we want it to go into mobile phones. So imagine you're walking home at night and you're walking through a park. You can just do a scan with your mobile phone and see if there's anybody hiding behind a tree.
That would be very useful.
It'd be useful, right?
Yeah, that'd be amazing.
So we like this sort of society tech.
Also, as soon as we get into like the Apple goggle era, you know, you can integrate it into that as well.
It'll be embedded into your contact.
That's very cool. Obviously, you're working at like probably one of the most interesting junction points of the industry between tech and property.
Yep.
How have you seen the industry change over the years? You've probably got like a front row seat to it all.
So we're doing our own direct investments into assets as well at the moment. So we've got our first construction project in Melbourne. We just had it topping out.
Was that
Windsor Place. And so what we were seeing from our partners we were getting a little bit of our technology into their assets. We weren't getting every one because we've got 35 companies. Just the attention span required to go through 35 companies is pretty hard. And then when we started to do our own development, we actually realized there was a much easier way for us to embed the technology in from day one. Mm-hmm. And so I expect that by the time we complete Windsor Place, we'll have 10 to 12 of our companies in that asset.
That's amazing.
But what we're proving is that technology delivers actually a higher level of rental at a lower cost.
And it makes it more useful because you're able to connect into everything.
Makes it more
usable.
usable.
From an investment perspective.
Better from an insurer point of view.
Yeah.
Right? And insurers love it because we're installing water technologies which identify water leaks that can be activated remotely. Well, insurers love that.
Yeah, they're like, that takes a huge load
We'll
off.
give you a lower premium, and the premium more than covers the costs of that technology.
That's amazing. And the technology continues to, generate returns years after it's been paid for.
And then if you think of the way we build assets, so one of our very early investments is a company called Open Space. And this is a technology that you basically walk a construction site and it records everything that you see and it compares it to the BIM modeling. Really useful. But imagine if you're buying a new asset and you could understand how the asset was built and actually to the granular level of seeing every floor as it's being built. You actually have much more knowledge about the asset, right?
And much more confidence in investing.
And if you're a bank, you're probably going to offer better
Yeah.
better terms on that asset
Yeah.
because you know it's been built better. If you're the insurer, you'll be more happy to insure this asset because we've got the complete digital rendition of how it was built.
And it's completely transparent, so you're able to, there's no secrets on, hey, we've cut corners here or anything like that.
And so if you have an opal tower or some of the problems we've had in Sydney with residential towers where there's been a problem during construction that's only come out after completion.
We've had a few of those in New Zealand too. Yeah.
So how do you find, I mean, this isn't about who made a mistake.
No.
So we blur faces. If the camera picks up a person, it blurs the face. But this is about understanding what the problem is and how do we fix it. And so we can wind back the clock and say, well, this beam, it didn't have the right insulation, and that's why this room doesn't have any temperature.
That's
right?
amazing. There's so many use cases for this technology. It's incredible. As we've been speaking, I've noticed you've talked about a lot of different places that you've traveled to as part of, I mean, last month you were in New York, I believe. What has
Next
that
week
been?
we're in Hong Kong.
Oh my goodness.
So it was interesting. So we actually raised a fund during COVID.
Wow.
And
That's
that was
great.
through relationships. So people that we had met and we knew and had worked with for many years became our investors. But I don't think you can win new business without meeting people. And so a lot of our work is actually going to meet new investors, new founders, new partners. And it's very different to meeting somebody in person and to doing it on Zoom. Right?
Yeah.
And I think that what we do in these markets is we're meeting new companies. When we're in New York, we actually met some of our companies for the first time.
Wow.
So we'd been investors with these companies for 3 to 4 years, but it was the first time we actually got to meet the people.
That would have been amazing because you invest in them at point A and then you kind of see the growth journey and then actually get to meet them,
It's very strange. So normally you would meet them beforehand, but because of the the weird world that we went through, and then also to meet some of the customers. So we had one of the technologies is a water technology called Wint, and they have a very big deployment in the Empire State Building.
Oh, amazing.
So this is a tech that uses narrow AI to identify water leaks, right? And when I went and met the Empire State Building people, they said, yeah, it was incredible. In the first week, we found a leak that we didn't know about. And that's more than covered the cost of any installation. And the leak had probably been there for a number of years.
I went to go visit the Empire State Building last year. And when I went there, the technology and the ESG investments into that building are incredible. That was a bit of a property nerd moment, but that was my favorite part of visiting the building.
So the Empire State Realty Trust, they own about 11 buildings.
Yeah.
It's not just one asset. They've got quite a few. But they have decided they want to be the number one realty trust in the US from a sustainability point of view. Yeah. They want to be number one. And that means their openness to trying new technologies is far greater.
They made so many changes, though. I mean, that's such a historic building, too. So they're taking a lot of risk to make those changes and, still maintain the beautiful building that it is.
Yeah.
And it's
so tenants want to be in Empire State because it's the Empire State.
Yeah.
Right? But the adjacent assets, they want to be in them because they're really high quality assets. And some of them are actually still quite old.
That's
so
cool.
1935, 1940 buildings. But it's that sort of decision making at the top that has actually made the change.
That's amazing that they've got such a clear goal on, wanting to be number one. And obviously you get to see a lot of different changes in companies or trusts like the Empire State Building Trust that are making those changes and achieving those goals and stuff like that. Is that one of the things that excites you most about the industry?
So I go through different waves on this. So you see some of the major real estate groups have gone through fundamental changes. And if we look at some of our own partners, so Dexus is one of our other big investors. So after CBRE, Dexus came on board. And what's happened to a Dexus over the last 5 years is quite incredible. So it was very much an office-focused trust, the highest quality office portfolio in Australia. And now it's one of the world's leading infrastructure funds. So with the acquisition of AMP, they now own toll roads, airports, they own healthcare, hospitals. It's become a very diverse business in the last 5 years. So from one asset class into many asset classes. And I think what's most exciting at the moment is that many of the bigger investment groups are actually on that journey into more alternate investment spaces. So you've got logistics groups that are becoming data center operators. You've got the big retail owners Many of them are now exploring build to rent and adding residential into their
Kind of creating
portfolios.
it into a multi-use campus almost.
Yeah, and even Dexus now is doing residential, which is something that 5 to 10 years ago people would have expected it's just going to be a commercial operating vehicle. So I think that the corporate world is changing quite dramatically, and to some extent that really helps us, because as the corporate moves into that new infrastructure space, it requires a different mindset about how you manage assets. And we are there providing technologies to support that change, which just makes our mandate get bigger and bigger.
And that's exactly what you want,
So now we've made our first investment into quantum computing.
Wow, that's amazing.
Right. So our role is to be 5 years ahead of our corporate partners. And so corporate groups are all thinking about the future of data centers.
Yeah.
Everybody's got a new data center fund. But the data center of the future will actually require quite a different mindset. Energy requirements are massive. And then if we look at the impact or the potential impact of quantum computing, it may change the way a future data center will operate. You'll still have the traditional data centers, but you'll have this, hybrid model that's going to be quite different.
What do you see the future looking like as we, 5 years down the line, as you're saying, start using and applying quantum computing into different areas?
I think there's a lot of parts of the real estate and real asset sector that will be disrupted.
Mm-hmm.
And I think there's, if we were to ask across a major organization how many people are using AI, if you start at the 50-year-olds and above, it'd be maybe one or two and very little bit. If we get to the sort of 30 to 50-year band, there's a little bit more activity. Below 30, everybody is using AI every day. And so I think there's going to be, if you think about the due diligence of an asset, and you're looking at one asset and you're looking at market comparables, there's a lot of tools now that can allow you to actually bring together a whole lot of information very quickly to analyze which investments you should acquire, and also which parts of your own portfolio you should sell. Those tools are there and available right now. As that moves forward, at what point does investment management become a decision made by an individual or by an individual supported by AI, which is there already? I think it's going to be a lot of change.
Do you think that, with the younger cohort using AI so much, to have that, to continue investment and the sort of analysis that has to go on to it, so it doesn't just become digitally run by computers, do you think that they need to focus more on, having the experience outside of AI?
You want both.
You want both?
You want both. So I've been, if I think of like the early days of ChatGPT, so I kept asking the same question, and that is, why is the rent on one side of the Champs-Élysées higher than the other? And you might know the answer.
I actually don't. So
right. So the first 6 months of ChatGPT said it's because some retailers like to be, on one side of the street, and there was no mention of sun.
Mm-hmm.
The sun shines only on one side of the Champs-Élysées during winter.
Oh, interesting.
And that's the side that everybody wants to be on.
Yeah.
Because that's where you walk and you want to be seen, and the restaurants are. And that's why the rents are much higher on that side.
That's so interesting. I've heard of that for, residential sites and
of course, right?
Office sites.
North facing.
Yeah.
So Champs-Élysées, and now unfortunately ChatGPT has it.
Oh, it's developed.
It's learned. And so it didn't take it too long. It was the next version out that had it. And it's like, well, one of the questions we've had is, so at what point is an AI going to create a company that will actually generate $50 million of revenue?
That would be interesting. I heard someone debate that, and, would it allow for universal income?
Debate. Yeah.
Yeah, would it allow for universal income for people, though? That would
so at the moment, you cannot create a company without having a person involved. So we've still got a chance.
Yeah. Well, we're just kept around as like a head figure.
Yeah.
Signing feature.
Signing feature. But it's quite fascinating. And there will be revenue streams that are generated from the use of AI.
100%.
Absolutely. Yeah. So we, as a business, we have an open mind. When ChatGPT came out, we actually, from an organization point of view, we had everybody start to use the tools and start using it. We're using it more and more. But it's the mindset that's the difference. We've got to be open.
Different models like Claude and some of the ones. Yeah.
And then from a design perspective, we're using lots of the tools. But you think about, take that through to the actual compute power that's being generated from, and the energy that's being required to deliver those outcomes. That's the scariest part of the future of data centers.
Yeah.
The energy use is just going through the roof.
And the water use.
Energy, water.
That's gonna, yeah.
So then that's back to, again, more technologies to improve energy efficiency and ensure we're not wasting water.
Yeah, I think that's going to be the biggest thing that people are, I guess, as we use AI more and more and more, and data centers become, more prevalent. The use of water, people are, I feel like, growing more concerned about it. What are some of the other AI tools that you think are either super valuable for people, as they work in property?
From an investment point of view, a lot of the businesses we're seeing now talk about their AI credentials, but when we dig into the business,
machine learning.
It's machine learning and a little bit of
it's a tiny bit of AI.
It's on the journey, which is important. But it's also what we want to see is what is that true, I guess, that true AI that's coming through that's a differentiator and that might become a moat that will protect the business's value. So again, a couple of our companies, Prescient, it now has a 10-year database of working out a person being a human and using AI, which is a valuable data set for other businesses. And so what I think we'll see is that these data sets will become quite valuable. Now, one question is whether some of the fakes that can be created will actually then offset the value of those data sets. We don't know that. There is a legislative change that's probably coming to restrict some of those use cases. But to have that information and data already and some of the collection that we're doing, so
that opens up a whole new revenue stream. Yeah.
So Open Space, the company that does the construction monitoring, that business, it's the image bank that it now has of construction we think it's probably the biggest data bank of construction imagery. And if we take that forward, so one of the things we want that business to move into is identification of waste reduction on a construction site. And at a high level, so this is an extension of the current technology that could lead to about a 6 to 7% reduction in construction waste. Mm-hmm. And then if you think about construction margins, they're very, very, very tight. If we can add a buffer into any construction project, we've got a much greater chance of the construction being successful.
Yeah.
And not wasting materials. And so a very straightforward example is we might see that a rebar is being laid, the cement's about to be poured, but the rebars are not aligned, and we can actually stop the pour. Now, if that pour had proceeded, you have to dig up the floor and so it's
very timely process.
Very timely processes, right? So that sort of use of AI, I think, is going to become, especially during development.
Do you think it could also, because it's got a huge image library essentially, do you think that it could sort of become a computer-aided design and, if someone wants to send in a prompt and say, hi, this is the development we want to run, it's these dimensions and this space, upload floor plans, anything like that. Do you think it could? Because it'll understand the structures and the process to build a site. You could almost run a sort of modeled design.
Possibly, but I think that the risk there is that, from a construction point of view, you're putting in different layers of construction into structures that aren't set for it.
Yeah,
I think that there's so much opportunity with that company. At the moment, it's moving into actually defect management.
Okay.
So if you've got imagery and you can tag, emergency access sign not working, and then tag it to an individual, and then they can actually tag that it's been repaired. And that sort of process improvement is actually where the next phase, I think, goes.
That's awesome.
But it could be, I think there's still, so the question of architecture and design and computer-aided design, I think there's no doubt that that's going to be massively disrupted.
Yeah.
And automated. Yeah, so I'd much rather be a developer that's incorporating innovation and tech than one that is just saying, oh, no, I'll wait.
I'll keep doing it the way that we've been doing it. Yeah.
And that's what you do here. You hear a lot.
Yeah, it's a shame because, as we've discussed, there's so many incredible use cases that you can integrate to not only make your life easier as a developer, safer for your team, better for your investors and, occupiers with the ESG elements, and far more connected to your users through the measurement, but also through the app and offering, different opportunities. Precinct obviously has their app back home in New Zealand, but there are so many ones here that also do that.
Yeah. So why wouldn't you do it?
That's the $1,000,000 question, isn't it? Or
So we
probably
just got to
$1,000,000
make it
question.
easier. We've got to convince them very gently and take them on the journey.
Bring them on the journey. Wonderful. Now, I want to touch back. In your career, you undertook the McKinsey Best Practice program, correct? I was just wondering, what are some of the learnings you got from that you've been able to apply in your role at Taronga?
So this was actually initiated by ADIA. So I was working in Abu Dhabi, and there was the beginnings of a sovereign wealth fund forum, and ADIA was very actively supporting this global initiative.
Yeah.
And so what we did, we had McKinsey was the accumulator and advisor to support the process. But ADIA went out to each of the major sovereign funds and said, we'd like to have an open discussion with you about your investing strategies. And then we met with the Temaseks, the Norwegian Oil Fund. We met with all the big sovereign wealth funds in an open forum where we shared how our investments had gone, what investment strategies had worked, and also what didn't work. And then McKinsey put all that together for us.
What were some of the biggest learnings that came from it?
Biggest learning. So, this was just after the global financial crisis, so 2008. And so what we found across the ADIA portfolio was that our highest performing investments were the ones that were done in joint venture.
Okay.
And so ADIA was a big global investor, had invested into funds, had made direct investments, and then had also done many co-investments with big operating partners. So I use this an Australian example. So in Australia, we had a series of 50-50 joint ventures with Lendlease. We had a series of investments with GPT. Now, we were also investors in GPT's office fund, their shopping centre fund, but actually the higher performing assets tended to be the ones that we did in joint venture with the fund, because we would get better terms. We would actually come in almost as an equal partner. And we also had that ability to follow through in these investments and to actually scale them. So creating assets like Darling Walk in Sydney, the Commonwealth Bank precinct, incredibly interesting investment. Bidding on land to begin with without a tenant, designing an asset to be 6-star, able to secure a tenant before the designs were even completed. The bank was very, very on board with this. But it's one of the best performing assets that ADIA had. And so I think that model actually showed us that the sort of club style or 50-50 investments were the most effective. Outperformed funds and definitely outperformed the direct investments.
That's amazing. What do you think, when you're working on a joint venture, there can be some risks in terms of blending the two cultures and establishing that sort of equal partnership in a way, and, making sure that both teams have respect for each other. How do you make sure that that's achieved in the early stages?
So for a joint venture to succeed, I think it's partly cultural. It's quite a lot of legal.
Yeah, a lot of contracts.
Right, so a lot of protection within the agreement to make sure that there's a clear understanding of how the development agreement will work. Decision-making rights for ensuring that we're on board and have a similar viewpoint. But when you're dealing with groups of the caliber of a Lendlease, it's quite a smooth process. And it's not just in Australia, so this was also across other markets as well, in Singapore. But it's that sort of co-investment. Some of the ones we did in Japan were incredibly effective joint ventures. We did one with LaSalle Investment Management, a site in Akihabara, in conjunction with Mitsubishi Estate. Incredibly successful investments. I'm not sure I'm allowed to reel, but almost a 2 times equity multiple over about a 24-month period.
That's very impressive. Yeah, that's very impressive returns of it, and that's quite a short time too.
A very short time.
Yeah.
And I think that it's when you have that relationship and strong partners that have local knowledge, and you bring in capital and your global skill sets, and then the combination.
The local knowledge must make such a difference too. And
real estate's local.
Yeah, you can't bring it in from overseas and apply the same rules to different areas.
But also you can then bring in some of the things you're seeing from other markets from an international perspective.
Try and tailor it to the local market in a way and sort of bring those benefits home.
Yeah.
Exactly. Before we wrap up, I have a couple last minute quick fire questions. Have you had a mentor throughout your career that you sort of...
Many.
Many? Wonderful. Is there a standout piece of advice from your mentors that you've been given?
Some of them have been like former employers that I've worked for and then continued a relationship. And in some cases, when I was employed by the individual, very high level of respect for, often quite demanding bosses. And then when I wasn't working for them, having that ability to sort of check in with them and see what we're thinking about was truly valuable. We have a couple at the moment as well, and I'm sort of always thinking about the future of where the business is going, and being able to have a discussion with somebody that knows you, that is independent of you, independent of your business, and able to sort of
give you some
guidelines of it's really important. So, and I also take it the other way. So I've also mentored quite a few people and had that similar relationship where, again, wanting them to succeed, giving them some guidelines on how to do it. And I expect that for many of the mentors that I'm working with, the mentees, in some cases they might end up working with us again in the future. And so it's that relationship that just sort of continues on.
Yeah, it's not really a fixed term thing, is it? You sort of carry it with you, and even some of the advice you pass it on to the next person, and it keeps going and growing.
Yeah, and I think it's that independence is the key. That they're just on your side.
Yeah,
and it's not a bad thing to have that in your corner.
And they can give you independent advice too.
For them to feel that they can actually give you critique. And to actually...
That's where you learn the most, though. I mean, It's like what you said with you have to have the confidence to fail sometimes, because in those moments, you've learned what's gone wrong, and that's sometimes more valuable than what's gone right. Obviously, we've talked a lot about some of the different places you've traveled. Do you have a favorite place to visit on business or not?
I think for business, the energy that you get from New York, it is unmatched. And the number of meetings that you can actually squeeze into a day.
Well, the day kind of goes 24/7 over there.
Yeah, and it is quite incredible. I used to have that same feeling in Hong Kong, so it's going to be great to be back in Hong Kong over the next few weeks.
Exciting.
Middle East has become really interesting lately.
Any favourite spots?
I think Abu Dhabi is very much an interesting place, and there's this can-do attitude in Abu Dhabi that I've not seen anywhere else in the world.
That's awesome.
I'll give you a really good example. So we have a number of partners in that market, and we work very closely to try to bring technology companies into the UAE and into the region. And when we do a session with them and we introduce maybe 3 to 5 companies at a time, they have like 500 people turn up to the call.
That's amazing.
And you don't get that anywhere in the world. And it's the questions that come back are incredible.
That's amazing level of engagement. And for the founders and the teams that you're bringing to them, that's such a good...
The founders presenting, and then you can see the teams is going up and up, and the founders like...
I can't respond to this all at once.
I didn't realise that there were going to be so many people.
That's better than sitting there, though, trying to ask for questions. That's amazing.
But I can't imagine that in any other world, in any other market. So let's imagine you're doing a presentation to an airport here, and lunchtime session, 10, maybe 5 opportunities that are coming into the market. I don't think we'd get 500 people attend.
No, that's amazing. 500's huge.
Unbelievable, yeah. I mean, it's happened, and if it had been once, I would have been like, that was just a one-off.
But it's regularly.
And the same in Japan.
Really?
So we've got 2 Japanese investors. We've got Mitsubishi Corp and Nomura Real Estate. Fantastic partners. They're some of the biggest developers in Southeast Asia. But we do a town hall with them every sort of 6 months.
Wonderful.
And again, hundreds of people turn up. And we have to, there's language issues, and many of them are not wanting to speak, but will write a question. The questions come through, and there's just incredible traction. And I think that the Japanese companies have been our most prolific in using the technology.
That's cool.
So they will try everything. The mentality is we want to try everything. It's not, we'll
wait until someone else tries that first.
It's like we want it, and we want it first. We want to see it. We want to actually try it.
That's such a good attitude to have, though.
Tokyo is also a very important city for that. Yeah, like from visiting point of view.
Yeah, I'd love to visit Tokyo. That would be very, very cool.
Auckland, I should say.
We'll add Auckland in as well. As you've sort of grown throughout your career, has the idea of success changed for you?
I'd say very much so.
Really? What was it like? Okay, when you were starting and you were my age, what was success looking like to you?
I hate to say this, but I think I was very money focused to begin with. and and I went to China first. So I did 7 years in China, and was very much focused on salary and bonuses, and I think it was probably that period it was fine. China was growing rapidly, and there was changing jobs and moving to improve situations. Yeah, climbing the ladder. But I think probably from mid-30s and from having children and family, I think the sort of positioning has changed to once you get to a level that you're comfortable, I want to look at what am I doing? Why am I here?
And how can I create like a impact and
because and it's
the
like
funding you've given to these
what are we actually? Why are we
change things?
Why are we doing Taronga?
Yeah,
we want to change things. We want to turn it up a little bit.
Impact that long outlasts your time at the company.
Exactly.
And
yeah.
you can keep it going. And I mean, also for the investors, the users, like it has such a wide-reaching impact.
Well, I think it's partly that that legacy of we want to leave an environment, and if you think of the real estate sector, it is the world's biggest polluting. If you think of the construction process, it's heavily polluting.
New Zealand, 32% of our pollution comes from construction.
So the global numbers sit between 39 and 40% of all CO2 emissions come from real estate and real assets, and it changes just on out there. So if we could impact that a little bit, I think I'd be pretty happy.
Yeah, I mean, even just reducing it, 1% every 1% better every day almost.
And I think we've identified companies that they deliver a financial benefit and a carbon outcome.
I mean, you can't get better than that, really,
so
can you?
So we just have to keep putting them in front of people to say, well, why aren't you using carbon pure?
Yeah, like this will help you. Yeah.
And everyone's using it.
Yeah.
So you're actually a bit slow.
Falling behind here.
Yeah.
Well, just to wrap up, we've looked at what success has changed over the years. If you could go back and give your younger self a piece of advice, what would it be?
I think probably a touch more patience.
Patience? Do you think he would listen to that advice?
Probably not. But I think it would be a good thing to, so I've had a number of moves into different markets and moved country 6 times, right?
Wow.
So I think it never was planned. It was just things happened and opportunities came up, and it seemed to sort of move quite well. I think early on I had a little bit of it was an impatience for change, and possibly that could have been, if I'd managed that a little bit better, I might have had some of those jobs might have lasted for longer than they did.
But
there's no
the opportunity to
so I had
travel somewhere new is always quite exciting.
I had a very early boss who was at my first experience with venture capital, and he was a Singaporean businessman. He said, "You learn everything you can from a company in 2 years."
Really?
And he said, "I don't expect you to be here longer than 2 years. If you are, I'm happy, but you've
stopped learning.
You've stopped learning." And so if I sort of look through my career, and I've had a number of moves within the same company, but it sort of fits into 2 to 3 blocks where you learn everything about that business, and then you move to the next level. And if you can take those learnings and continue to build it, I think you become a more sort of wholesome, creative person if you can bring it all together.
That's wonderful.
But to have that ability to actually
make the move,
it's risky, but you never really regret it.
That's good. Did you have a favorite place that you moved across the 6 different times?
They were all different based on where I was in life and with my wife, and I think we really enjoyed each location at the time that we were living there. Mm-hmm. I think Singapore, to have young kids, was magic.
Oh, that's nice.
Abu Dhabi was fascinating because it was a completely different culture. And actually our young boys at the time, kids loved it. The temperature, you get used to it.
It'd be very hot, yeah.
No, you get completely used to it. The working locally was a really fascinating experience. Sweden was fantastic because of my wife being Swedish. The kids got their Swedishness.
Oh, nice.
And then coming back to Australia is pretty special.
Yeah. They get to spend time in, mom and dad's different homes.
Yeah, and I think from an education point of view, it's good to come back to Australia for high school.
Yeah.
If you can plan it that way, but that's how it works.
Well, it's been perfect alignment then, hasn't it?
That one worked.
Wonderful. Well, it's been so good getting to, first of all, meet and has
Yeah,
these
like
amazing stories. So thank you so much for spending time with us and offering up your time.
my pleasure. Thank you.
Thank you.